Hello friends, in my previous video, I have made you learn about the formulas of profitability ratios. Now, in this video, we are going to learn how to solve the sums based on the ratios, profitability ratios. Question number 1. A company earns a gross profit of 20% on cost. Its credit revenue from operations are twice its cash revenue from operations. If the credit revenue from operations are rupees 4 lakh, calculate the gross profit ratio of the company. That's a question. We know the formula for gross profit ratio is gross profit upon net sales into 100. Okay, we can use net revenue from operations as a denominator. Now the hint given to us is credit revenue from operation, that is credit sales is twice its cash revenue from operations, and credit revenue from operation is rupees 4 lakh. So it is quite understood that cash revenue from operations will be half of the credit. So 4 lakh to be divided by 2, that will be rupees 2 lakh. Okay, so cash revenue from operation is basically rupees 2 lakh. Let me have the total sales over here. Total revenue from operations is equal to cash revenue from operations plus credit revenue from operations. So let us place the values over here. So total revenue from operations will be equal to cash is rupees 2 lakh, credit is rupees 4 lakh. So total will be 6 lakh. We have total sales with us. Now the very important part over here from the calculation point of view given is gross profit is 20% on cost. Now whenever profit on cost is given, let us assume let cost be 100 in terms of percentage. Let us assume it has 100. Profit is on cost, so let us have the profit. So profit on cost is 20%, so 20% of 100 will be 20, right? So sales, because we know cost plus profit is sales, so sales will be equal to 120. 100 plus 20 is 120. Now the point is sales over here is 120 in terms of percentage, and the sales in terms of rupees is rupees 6 lakh, right? We need to have the gross profit. Profit can be seen as 20%. Okay, if sales is 120, so profit is 20. So if sales is rupees 6 lakh, so how much is the profit? So let us calculate that. So profit will be equal to 6 lakh into 20 by 120. Okay, so answer will be rupees 1 lakh. So this profit basically will be my gross profit, right? So let us apply the values over here, because I have gross profit with me, I have sales with me, so I can apply the values over here. So let us have the values in gross profit ratio. So gross profit ratio is equal to gross profit is rupees 1 lakh, net sales is rupees 6 lakhs, right, into 100. Okay, so answer will be gross profit ratio will be equal to 1 lakh by 6 lakh into 100. Okay, so answer is 16.66%, right? It's very easy to start with the gross profit ratio. We were given the credit revenue from operations. With the help of that, we were able to calculate the cash revenue. From there, we were able to calculate the total revenue. This is something very important. Please take care. Whenever the profit on cost is given, so let us assume the cost is 100, profit is 20% on cost, so sales will be 120, because the basic thing is cost plus profit is sales. So based on that, we were able to calculate the profit, that is gross profit, and then applying the value in the formula, we were able to calculate the gross profit ratio. The next sum now is we are again asked to calculate gross profit ratio from the following information. We are given the net profit, we are given the operating expenses, interest on debentures, profit on sale of investments, and net revenue from operations. Because net profit is given, so what I prefer is to prepare P&L account in rough as a part of the working, and from there we can calculate the gross profit, because the formula for gross profit ratio is gross profit upon net sales into 100. For this net sales, we are given the net revenue from operations directly, so we need to have the calculation of the gross profit. So let us put the values over here one by one. Net profit can be seen as rupees 1 lakh. So let me place this value over here, 1 lakh. Operating expenses can be seen as rupees 40,000. So let me place this 40,000 over here. Interest on debentures, as a part of the company, I know like I have to pay this. It's an expense for me. So 5,000 rupees being an expense, I have to debit it. Now profit on sale of investments, I need to credit it because it's a profit for me. So 10,000 is a profit. So out of these available amounts, now I need to get the total and the difference. The total on the debit side comes to 1,45,000, and let me place this 145,000. So the amount of gross profit will be rupees 1,35,000. This is a part of the working. Now, if you have to present this by way of formulas, let us do that over here. So let me write this. Gross profit is equal to net profit plus expenses, because we are supposed to move in the reverse order. So I will be adding expenses and will be deducting incomes. When I write expenses and incomes, that will include all the expenses and incomes, whether it is operating or non-operating. Okay, so gross profit is equal to net profit is rupees 1 lakh. Expenses can be seen as operating 40 and interest on debentures is 5. So 45,000 minus incomes is rupees 10,000. So the difference is 1,35,000. Because I have both the values with me, I have net revenue from operations, I have gross profit with me. Let me write the formula and place the value. Gross profit ratio. We know the formula very well. Gross profit ratio is gross profit upon net sales into 100. So gross profit has come to rupees 1,35,000 and the sales amount is 6,75,000, right, into 100. So let me write the percentage over here. Gross profit ratio will be equal to 1,35,000 to be divided by 1,35,000 to be divided by 675, right? That is 20%. So this is very easy for us to solve the sum now. You just need to understand that this format is there as a part of the working, and this is final answer from your side. Next sum is very important. Calculate gross profit ratio from the following information. Inventory turnover ratio is 6 times. Debtors turnover ratio is 7 times. Average inventory is rupees 1 lakh, average trade receivables is rupees 1,20,000, and cash sales is 16% of net revenue from operations. What we know is like we have to calculate the gross profit ratio. The formula for that is gross profit upon net sales into 100. Inventory turnover ratio is given to us. The formula for inventory turnover ratio is cost of goods sold upon average inventory. Debtors turnover ratio is also given to us, that is credit sales upon average trade receivables. So let us start with inventory turnover ratio. Inventory turnover ratio, I'm writing in short over here. Inventory turnover ratio is equal to COGS upon average inventory, right? What is given to us? Let me write the formula first. COGS upon average inventory, right? Let us place the values now. Inventory turnover ratio is 6 times, so that is equal to COGS is not there, but average inventory is given to us. So let us place the value. COGS upon average inventory is rupees 1 lakh. So while applying the formula, we will be able to calculate the value of COGS. So COGS will be equal to rupees 6 lakh, right? The next formula which I would like to work on is debtors turnover ratio. Debtors turnover ratio. So debtors turnover ratio formula is well known to us, that is credit sales upon average trade receivables, right? Now out of 3 we are given 2 values. Debtors turnover ratio can be seen as 7 times and average trade receivables is 1,20,000. Let us place the values. So 7 times is equal to credit sales. We will be able to calculate the amount of credit sales from here. Credit sales, and upon his average trade receivables is rupees 1,20,000, right? So credit sales will be equal to, or credit revenue from operations, that will be equal to 1,20,000 into 7, right? So that will be equal to 8,40,000. Okay, now we have cost of goods sold with us, we have credit sales with us, and another hint given to us is cash sales was 16% of net revenue from operations. This is a very, very important hint for the sum. Now let us assume over here, okay, let the total sales, or total revenue from operations, okay, net revenue from operations is 100 in terms of percentage. Cash sales is 16%. So credit sales will be 100 minus 16, that will be 84, right? Now total sale has been assumed as 100, out of which cash revenue from operation is 16 and credit is 84%. Now out of these three, we are aware of this credit revenue from operations, that is 84, and the amount in terms of rupees we have calculated is 8,40,000, right? So let us calculate the total revenue from operations, right? So wait there, net revenue from operations, or we can write net sales as well. Okay, so that will be equal to 8,40,000 into 100 to be divided by 84, right? So this will come to rupees 10 lakhs. Okay, so we have net revenue from operations as rupees 10 lakh. Now point is, we have been asked to calculate the gross profit ratio, and the gross profit ratio is gross profit upon net sales into 100. We don't have gross profit with us. We need to calculate that. So let us apply the formula of gross profit over here. Gross profit will be equal to, gross profit is equal to net revenue from operations or net sales minus COGS. Both the values are there with us. We will be able to calculate the value. Gross profit is equal to, net sales has come to rupees 10 lakhs and cost of goods sold is rupees 6 lakh. So the difference is rupees 4 lakh as gross profit. Now it is very easy for me to apply the formula of gross profit. Gross profit ratio is gross profit upon net sales into 100. So let us place the values in the formula now. So gross profit ratio will be equal to, gross profit has come to rupees 4 lakh, net sales is rupees 10 lakhs, right? And then into 100. So this will give me 40% as the answer, right? So you just need to understand that whatever the hints are given to us, inventory turnover ratio was given, so I applied the formula of inventory turnover ratio. Debtors turnover ratio is given, apply the formula of debtors turnover ratio. You will be getting some other thing. With the help of those things, we'll be able to calculate the required ratio, right? The next sum is now, with the help of the statement, we have been asked to calculate gross profit ratio and operating ratio, right? Both the ratios are very, very important. Let us start with, now gross profit ratio, the formula is well known to us, that is gross profit upon net sales into 100, right? How do we calculate gross profit when statement of P&L is given to us and some notes to accounts are there, right? So gross profit is revenue from operations minus COGS. A very basic formula is there with us. And COGS, whenever statement of P&L is given, I want you to apply this formula, that is C plus P plus C plus E plus O. C is cost of material consumed, P purchase of stock and trade, C again changes in inventory, E employee benefit expenses, and O is other expenses. Now again the question is, why I have marked this employee benefit expenses and other expenses with red? because from these expenses like employee benefit expenses, I need to take care of the direct expenses, because direct expenses only is a part of cost of goods sold. In the same way, from other expenses also, if I have any direct expenses, I will include that, right? So let us start working on COGS first of all. COGS will be equal to cost of material consumed, can be seen as rupees 15 lakhs. Purchase of stock in trade is not there. Changes in inventories can be seen as rupees 1 lakh. Right? Employee benefit expenses. In employee benefit expenses, note number 1 is there. So let us see that note number 1, and we can see that wages and salaries both are included. And out of wages and salaries, wages is amounting to rupees 1,50,000. So I need to include that 1,50,000 over here. Now, in other expenses, I need to check if any direct expenses are there or not. Other expenses, note number 2. In note number 2, we can see that it is administrative expenses, selling expenses, and loss on sale of investments. So no direct expenses are there. So let me get the total over here. So total of these three, 15 lakhs plus 1, 16 lakhs plus 1, 17 lakh 50,000 is my cost of goods sold. Now, once I get cost of goods sold, it is easy for me to calculate the gross profit. So gross profit will be equal to, gross profit is equal to net sales minus COGS. Revenue from operations can be seen as rupees 25 lakhs, and from there I need to deduct the COGS, that is 17 lakh 50,000. So gross profit basically amount comes to 7 lakh 50,000. Okay, so this is my gross profit. Now once I'm able to calculate the gross profit, so let me calculate the gross profit ratio also. The formula is already mentioned on the top. So gross profit ratio will be equal to, the amount of gross profit has come to 7,50,000. The sales amounts to rupees 25 lakhs, right, into 100. Okay, so the answer will be 30%. 7,50,000 to be divided by 25 lakhs into 100 is 30%. This is how we calculate the gross profit ratio. But apart from that, we also have been asked to calculate the operating ratio. So let me write the formula for operating ratio over here. Operating ratio is equal to operating cost to be divided by net revenue from operations into 100, right? Operating cost to be divided by net revenue from operations, I'm writing it as net sales over here, into 100, right? So what is operating cost? We also know this. Okay, operating cost will include the COGS and operating expenses, right? Now COGS is well known to us, so let us work on the operating expenses. Now what are operating expenses? Operating expenses are after the direct expense, which are expenses are left out, right? So let me write over there. It will be employee benefit expenses, E plus F plus D plus O, right? EFDO is my operating expenses. Again, I need to take care of this E, that is employee benefit expenses. From here, I need to check the indirect expenses only, that is not the direct expenses, finance cost, any interest on short-term borrowings. O, again, I need to check over there from finance cost, the interest on short-term borrowings, and O is there again, I need to check the operating expenses only. So I need to have a check on all these amounts, right? So let us start working on this. Operating expenses will be equal to, now employee benefit expenses, wages as a direct expense we already have taken care of. Now salaries is left out. Let me include salaries from employee benefit expenses, rupees 1,20,000. Finance cost, I have 60,000, but there is no mention to whether interest on short term or long term. So we just assume that key finance cost includes all the interest on long term borrowings. So we need to ignore that. Depreciation and amortization is not given to us in this question, and O is other expenses. Now from other expenses, we need to include administrative expenses and selling and distribution expenses. because loss on sale of investments is non-operating. So I need not to look for non-operating. I just need to have operating expenses only. So 60,000 and 80,000. So let me get the total for this operating expenses. 1,20,000 plus 60 plus 80. This will be 2,60,000, right? Now when I have operating expenses with me, I have COGS with me, I can calculate operating cost and put the value in the formula. So let me calculate operating cost. Operating cost is equal to COGS. COGS was 17,50,000, right? Plus expenses, operating expenses is rupees 2,60,000. So total is 20,10,000. Okay. So this is what is my operating cost. Now let me apply the formula and place the value. Operating ratio. So operating ratio is basically is equal to operating cost. Operating cost is rupees 20,10,000 to be divided by the revenue from operations, that is 25 lakhs, right, into 100. So let us calculate this and write the final answer. Operating ratio is equal to 20 lakhs 10,000, right, to be divided by 25 lakhs. How much is the percentage? 80.4%. 80.4% is the final answer. Correct? I'm sure like you all have been able to understand this. You have to go step by step. For calculation of gross profit ratio, what are the required material is here, you calculate one by one, and please remember the formulas. COGS is CPCEO, right? This was one important formula, as well as for operating expenses also, right? That is EFDO with some conditions. Okay, the final answer is 80.4%.